Good morning. How's everybody doing this fine, fabulous Friday morning? Weather's going to be pretty amazing this weekend. I'm really excited about that. And the reason why I'm stalling is because my guest, Hector Ramirez, is running late. We were supposed to talk about what's going on in the market, what's going on with the rates, and why that's going to affect everybody. Lots of stuff going on, right? I mean, everybody knows what's going on. Hector, get online. You're killing me here. I could do a show without him. That's fine. One of the big things I wanted to show is this. This is historically a bad problem. I mean, when you see those two yields come in, the bond rates come in, well, look at that. Get rid of that nasty ad. When you see this happen, that inversion of the two bonds, that's just not a good thing for anybody, because what's going on here? Hide, exit full screen. Okay, so this is what's hurting everybody. This is pushing us into inflation. This is pushing us into the cost of money going higher and more expensive. Even though we say gas prices are going down, it doesn't really matter because the cost of money makes gas more expensive. It's the same thing with the chicken, right? Chicken was $5 for a while. Now it's up to 15. I'm sure it's coming down a little bit, but still, because of inflation, the cost of the power of the dollars weakening within the United States. Now, outside the United States is totally different. And I think that's the argument that I want to have with when I say argument, I don't mean we're going to be yelling at each other, talking like Fox and CNN. I want to have this discussion because, from Pollyanna to Chicken Little, we all need to understand that the market's going to do something. The economy is going to do something, but also the global market and economy are going to do something. And we already see it kind of failing, right? We don't have those answers. All we can control is what we're doing here in the United States. And for the most part, we can suggest stuff, to suggest ideas to different countries, but so my feeling is that we're going to see rates go up even further. And that's the whole idea behind this, 7%. I think we need to see it 7%. I think we need to see it 8 or 9%, because just like we've been saying all through the last few months, we need to rip that Band-Aid off and not destroy the economy, but slow down the economy so that cost of living is better for everyone, right? Well, there he is. Holy crap, Mr. I'm always on time. You know what? I always have to say, you know what, Hector? You close loans far better than you show up on time to.
I guess that's the most important part, though, right?
Welcome, buddy.
Good morning. Great to be here. Happy Aloha Friday. We've had a really crazy morning, but yeah, it's good. It's always good to see your face and be online here with you.
Yeah, I'm glad you finally got online. I know you're like probably woke up late and like slept in.
I got out of bed about 2 minutes ago.
Probably partied really hard until about 3 o'clock, 4 o'clock last night. Well, I get up at 5 o'clock and go to the gym and hang out and have my coffee. Just kidding.
So I do about the same, just cut out the gym part.
Right. Well, you're always welcome. There every day, 6 to 7. So, if anybody doesn't know, Hector and I actually met at 24-Hour Fitness, and we worked out together in this boot camp class, and we became fast and furious buddies and started busting each other's chops before either of us knew that we were in real estate together. And ever since then, we've been pretty good friends. So, remember that teacher? We used to bust his chops all the time. I can't remember. He was like a PE teacher at Bernal.
Oh, he was great. Gosh,
Yeah.
can picture him. I can't remember his name.
Yeah.
He retired and moved to Arizona. Smart guy.
Yeah. Yeah. So, Hector, yesterday you and I had this conversation about what's going on with the market, and we need to slow down the economy and all this stuff. Why don't we talk about that real quick?
Absolutely, Vito. Yeah, big week in the news this week. Obviously, it's Fed week, so the Federal Reserve met, and as anticipated, they increased the Fed funds rate about 0.75, 75 basis points. So not a big surprise for most of us who've been following the markets this year and in the weeks coming. Obviously, what was expected, right? Anywhere between 75 basis points and 100. And one thing the Fed's been doing this past year, I appreciate it, they've been very vocal. They've been clear with what their plan of action is, and they've been delivering on it, right? So, most of the market was pretty much, everything was built in, right? Like with the expectation that they would be raising. And again, that certainly happened, going back to kind of some of the things we've talked about before, the Fed's main purpose is to get inflation under wrap, right? We've got a 40-year high on inflation, and that's a big part of what affects mortgage rates, right? And obviously, we've all been feeling it on just about everything we do, right? Inflation being an inflated cost on everything that we buy and consume.
Yep. I was talking about that before you showed up. Mm-hmm.
And so that is, obviously all of us been feeling it. And now, we're really starting to see some of the effect of that, right? And I think, with just consumer debt going up and a lot of other things happening, right? I think that now everyone's really on board that a recession is imminent, right? And we're starting to see very small signs of that. But by the Fed increasing, interest rates, short-term interest rates, in essence, they're slowing down the market. And it's just a matter of, when we may see a recession. Fannie Mae came out yesterday and said Q1 of 2023. Goldman Sachs came out and gave their estimate as well. And so, we're likely to see, more recessionary signs moving into the new year.
Yep.
Which should eventually, the good news, the silver lining is eventually what we should see mortgage rates calm down a bit. It's been extremely volatile the last 5 weeks. Us lenders need a hug, right? It's been crazy. It's really hard to help people plan.
I'll give you a virtual hug, man.
It's been a challenge, right? And it's tough just because we're working with people, we're helping them to plan, to budget, to buy, and if the needle kind of keeps moving away from us, it affects approvals, it affects monthly payments, and so a bit of a challenge, obviously, for anyone in the industry. But yeah, that's really what we're seeing, and the fear when at the beginning of the year was that we would be seeing high interest rates. To be honest, we weren't expecting them till about this time of the year. And as you know, we've been experiencing high rates since almost March, right? Or excuse me, I should say a quick rise in interest rates since almost March.
Right. But historically, they're not, oh my God, high, right? They're not like 1970s, 1980s.
Right. But it's all relative, right? Like we're
Right.
coming from the last 2 years, which were the lowest ever, right? And us as humans, like we have short-term memory, right? Like I get it, our parents bought when it was double digits, right? But it's really hard to wrap our hands around the fact that interest rates have gone up. They've doubled, right, this year, right? We're talking in the last 6 months.
They doubled within like a few days of each other, right?
They've been moving up pretty aggressively.
Right.
We spiked in June, and then they kind of mellowed out through most of the summer, which we were kind of comfortable in that new norm. And then again, since August, really over the last month or so, we've been just they've been climbing. It's been a challenge for sure.
Yeah, but I mean, it's funny because I check and see what's going on all across the United States. And I talk to lenders all across the United States, and I see reports from everywhere. Definitely, for sure, inventory is going up, right? And houses are still selling, but you go across the nation and you see different areas. Like, it depends on where people are going to and where the people are leaving from. Like, I don't want to say it's a mass exodus, but there's people that are leaving California, right? And we still have people that are buying houses, but we have more people moving into non-income tax states, right? Whether it's political or financial free, whatever reasons, right? So you go to Florida and you don't see values decreasing at all. You don't see the volume. I mean, the volume has gone down a little bit and inventory has climbed up a little bit, but not to the extent that we're seeing here. And, I want to say that it's more local, just even to San Jose versus Menlo Park and Palo Alto and Cupertino. Right. Those places aren't hurting at all, right? Versus the one that, like, we have a house listed in Morgan Hill, and it's sitting 28, 29 days now. And we're in contract to buy another house down in Gilroy. And they're like, well, the listing agent is from Menlo Park or up the peninsula. And she's like, well, we don't have that problem. Why can't you find a buyer? It's like, well, two totally different economies, right? So, and the rates going up like this, it's affecting the base of buyers that are out there. It makes it less affordable for a lot of people.
Exactly.
So, I know it sucks. And I know that, we were kind of joking about it yesterday, right? But we've always packed away our acorns for days like this. So as depressing as it is, we still run a business, and we know that this is stuff that we have to endure. The good news for you, Hector, and me, Vito, is the huge amount of competition that we have out right now. Like right now, I want to say there's 25,000 real estate agents that I compete against. And I'm sure the numbers are similar to yours. That number is going to get cut in half within the next 6 months.
Yeah, sadly. I think that's kind of one of the byproducts of a downturn in economies, right? I know in the lending world, again, we came from record years, right? From every lender literally adding as many underwriters and personnel as they could to try to keep up with production.
Yep.
To literally almost have a switch turn this year. And, across the board, we've seen many companies, laying people off, right? Reducing the amount of staff that they have. And, naturally, and then also to your point, right? Like, when things were much easier, we were probably growing as an industry, right? On the sales side, which is, realtors and lenders alike. And now with just things being so much harder, margin compression, just the difficulty to close loans and close business, we likely will see the exodus of many professionals in our industry.
Right. And so I follow a lot of real estate investment, business investment people. And I'm not talking about stock market. I have many people, financial advisors, et cetera, that are experts in that. But I also follow the real estate investment people. It's two schools of thought, right? There's like, should I buy now and then refinance later? You have your pick of any house that you want, as long as you can afford it for the next 6 months to 18 months, right? Or should I wait until the market goes down? And will the market go down? Or should obviously the market's going to go down. Like, I just saw a report somewhere. I should have collected the link. San Jose is like the second most, I don't even know how to explain it. San Jose is hurting the most, or second most out of in every other city in the world. So the price contraction has come down, I think, like 10% for San Jose, which is like the second most. And I can't tell you who the first one is. Probably like New York or San Francisco.
Really? Wow.
Yeah. But it's a temporary thing, right? Just like what you're seeing on the screen, the rates go up and down every day. It's just like you see the stock market, the rates go up and down every day. We're spoiled in real estate because we're so used to. I mean, how long has it been since we actually saw a real contraction in the market? It's
Exactly.
2008.
Most don't even remember, right? Most of the buyers we're talking to haven't even been around for a recession, right? Most of us in the industry, I came on shortly after the mortgage meltdown, right?
Right.
So it really, for the most part, I mean, we were lending in a very similar environment, but we were kind of on the upswing, right? And we've seen some different, peaks and valleys and over the last 10 years, but the reality is, I mean, we're dealing with the highest interest rates that most of us have had to sell.
Yep. Yep.
Yeah.
So I can tell you because I went through 2008. I was still selling houses. I was still representing buyers and listing houses, etc. It was harder. It was a lot harder, right? And that's going to be part and parcel of why a lot of these people that got into real estate, they come in for a real, quick buck. They're going to find it really difficult to sell houses. They're going to find it really difficult. It's going to take longer. You have to have different tactics and strategies to work with people and adjust and pivot, right? And that's what I'm doing with a lot of my clients right now. I have a lot of clients that I'm working with. I mean, I don't know if I could show you. You can't really see because it's blurred, but there's a bunch of people right there that I'm working with. And, they're all kind of sitting on the fence, trying to figure out what's going on now, what's going on next, what should I do? Should I sell now? Should I wait until November? Should I wait until July? And the answer is we don't know. It depends on how badly you need to sell your house.
Right. Everyone's personal circumstances are different, right? But I think
Right.
you're right. Now more than ever, it's super important to lean on, your advisor, your professional, us as a team to help advise and really decipher when is the right time. And I think that's one of the important things when kind of talking to buyers is helping to understand when is the right time for them.
Right.
When is the right time for them, right? Because the reality is that markets go up and down. And I think one of the important things when I'm talking to clients is kind of two different segments. Either you're buying it to live as a primary home, or whether you're buying it as an investment, right? Those are two very, very different reasons to buy, right? And I think if you're buying it as a primary home, or if you're selling a home, you really just have to look at your individual circumstance and figure out what is the right time, right? If you're looking to buy, the first thing is to really take the steps and get approved, right? Really go through the process and understand what are your options and what does that look like, right? And then based on that, kind of make a decision. The reality is that payments are going up and they continue to go up over time regardless, right? And there's a significant opportunity cost with waiting, right? I mean, if we're renting, and we're considering waiting a year or two, we really have to factor how much money we're spending on rent and what we're looking to gain by waiting, right? And in some circumstances, like we have many clients that are selling, RSU, selling stocks, liquidating assets that are in the market. And that definitely could make the decision a little bit harder, right? Because as you know, and I think as you alluded earlier, it's like, equities are down, right? And they took another big hit over the last 48 hours, right?
Holy
So,
cow. Yeah, it's crazy.
yeah.
But it's going to come back too, right? I mean, that's what I keep telling myself. It's like this is the US 30 or yeah. And just the minute Powell talked about it, we started seeing everything just kind of start collapsing, right? Broke
Such
30,000
yeah,
a couple days
extremely
ago.
on Thursday, or excuse me, on Wednesday.
Yeah.
And it ended
But
pretty.
it's funny because if you look at the rates coming in, you saw it going up and coming down, going up, coming down, going up, coming down. we knew this is when we started talking about it going up the 75 basis points this week, right? And all of a sudden it pops up, and then it went back down for a minute, and now it's back up. But you know what? We need this to happen. We need this slowdown in the market to happen. This sucks. A lot of people are going to lose money, but you know what? This is what happens. Money's made and lost every day in real estate, in stock market, and everything else. And you know, the idea right now is to come together and find different avenues of making that money so that we can do this. So, you know, part of what I'm doing now is, you know, you watch me with Patrick on the financial advising side. I have a trust attorneys that I talk to. I have elder care specialists. I have you as part of my team. I have my wife doing the financial budgeting process. What we're doing is we're encompassing this entire team of professionals to help and understand what your story is and how you can best take advantage of it from being a first-time home buyer, whether or not you want to rent an apartment, buy a car, to when you're starting to retire, to when your parents pass away. What do you do? There's a whole gamut of different things that we're doing today. And we have this massive amalgamation of experience in different areas where, you know, you're my go-to, right? Obviously, right? And then we talk to you about the financial side. And then we have a financial advisor to talk about large investments and putting away. And then we have people that are elder care specialists. I've been dealing with them for a lot. It seems like half of my listings these days are of homes where their parents have passed away and they're taking care of it. And that's just part and parcel of what we do, right? It's been part of my business plan for, I want to say 7 or 8 years, and just being able to really help people understand what the options are, what the process is, who you can go to for help, regardless if you have a trust or you don't have a trust or a will. You know, these different things, they're all designed to, you know, you have to figure out every step of the way, or you can work with a team like us that understands, if you need to sell your house, what do you do? But if you're a first-time buyer, is this really a good time? Yesterday I posed this thing to you right now. It's like, what should we do if we talk to first-time home buyers and they're thinking maybe I should buy a house right now, right? How do we get, it's not whether or not they should buy, but what should we do to get them ready, right? There's always all these different articles and different videos and stuff like that. But you and I can sit down with them and create a plan that's, whether it's today, 3 months from now, or 3 years from now, we can get them ready, prepared to buy their first house. Because you can't just go out and buy a brand new BMW and then next week go and buy a house, right?
Yeah, not advised for sure. Definitely could affect your ability to buy. And I think that's really smart. I mean, I think one of the biggest, pet peeves is that a lot of buyers wait until they find a home to discuss finance. And it's really backwards, right? Like, this is the largest financial decision you'll make in your life. You maybe will make it more than once, but on the first go around, it's so imperative to sit down with a professional and actually go over your, you know, unique situation, run the numbers, and see where you stand, right?
Yep.
And that is going to help you determine when is the right time. You know, is it tomorrow? Is it next year? The work that you put in with a professional is only going to help you pave the way to get there, right? It's going to give you a lot of clarity on whether it's the right time or not. And if it's not, or if it is, what are the next steps to take to have you ready to be successful to buy, right? So I think, super important.
Yep. And, you know, the thing is so we work with a big team of different people, like insurance companies, right? I just looked at this thing over here for State Farm. That's who I've been with for the longest time. We talk with Rosemary.
Yeah.
I always want to make sure that we walk through the whole gambit, right? Because financing is super important, but credit is important. Making sure that you start saving away all your ducats and you start preparing for, you know, becoming, I don't want to say adult, but becoming, you know, a person of substance, right? You become a homeowner, you become financially stable, you become career oriented, and you focus on upward trajectory. What's that going to look like? And I don't have all the answers. I mean, Lord knows I don't know finance. That's why I go to Patrick, right? I know enough about lending that I can get in trouble. But then the minute I start getting into trouble, I bring you in, and you have the answers, right? You know how to coach people and how to work with them. And then taxes and trusts and all that other stuff. You have to have that entire team to be able to draw that picture of where are you today as a 20-year-old, a 21-year-old, or a 30-year-old versus somebody that's just going to say you need to sell your house. Let's just sell your house.
Yeah,
right?
that's awesome. That's amazing. Honestly, there's so many in our industry that don't understand that, right? I know personally, I work with a lot of financial advisors, right? And the reason I do is because the reality is mortgage is just one sliver of the pie.
Right.
I mean, it's an important one, but the reality is that it's only one piece of that pie, right? And so the big part of what we do is we work with a lot of local financial advisors to make sure that when we're strategizing for a client, that we're working in line with them, right? We're working in line with everyone else that is part of that equation for our client.
Absolutely. The more, and I understand you have your Aunt Betty who does real estate, and maybe she does one or two deals every year. And that's great. I understand. And that's the thing about real estate, right? It's so easy to get a real estate license, right? And I see it. I pull people onto my team, and then they're like sitting there. What do I do next? Well, go out and hustle. Go out and figure it out. Go out and make your calls. Go out and and they're like, I don't know what to do. And when you sell 20, 30 houses a year versus 2 or 3 houses a year, you get that experience of what's going on, and then you get to a next level, right? And I'm not doing this to brag, but you get to the next level and you stop having that commission breath. It's more about what can I do to service my client? I don't care about the money, because the money will come, and it does, right? And you do that too. You've been in this business for over 10 years. You know that it's not about the business, it's about serving. And that's hugely important. That's why I've been focused on bringing people together to talk more about strategies and tactics, and bringing a bigger picture, because the house is a big picture for a big chunk of their assets for a lot of people, but it shouldn't be. It doesn't matter if you make $50,000-$60,000 a year or $500,000 a year. The house should be one big part of it, but you should have a full understanding of what's going on, from insurance to financial to stocks to everything else, right?
Absolutely. It's super important to diversify and have a good plan leading into buying a house, and then as you become a homeowner, and how you manage yourself.
Right. Right.
From there.
So I know we've talked about this before, and I know you have a program that's designed around working with like first-time home buyers. You got a story or anything? I know I'm putting you on the hot seat, but if there's a story, or maybe like something, if you're in the market to buy a house, or you think you're in the market, you're a young professional, just got your first job. What are some myths or something, maybe a story or something that you can share with us?
Well, yeah, you kind of did put me on the hot seat.
Yeah, I like it.
What's great right now, and like why, part of the reason why, I advocate to really, consider buying now, is the fact that there are a lot of really great programs, right? So there is, from an investment standpoint, there's a lot of confidence in the market. And why that's important to a buyer is because you can buy a home with as little as 3% down, right? And in some cases, as you know, with 0 down, right? Obviously, if you're a veteran, if you're buying, more rural agricultural property through USDA, those programs are always 100% financing. And in addition to the low down payment options that exist for first-time home buyers, there's also local and state bond programs and programs that will help you with buying your first home, right? Whether it's a grant or whether they're allowing you to borrow the down payment. There's really, really good programs that exist, right? And in down markets, programs like this don't exist, right? Which is why I encourage buying a home, right? Because we're at a place right now where we haven't been for the last 2 to 3 years. In other words, buyers have options, right? Buyers have the ability to buy with down payment assistance programs. That didn't exist the last couple of years, right? The market was so hot that, a lot of our buyers were quite honestly pushed out of the market, and this is a unique time where we have all the programs where, as you mentioned, interest rates are still relatively low, and we have the ability to actually, find a home and negotiate it for you, right? Many homes today are coming in at or below asking. And just about every transaction that I've closed the last couple of months, there's been credits going back to the buyer towards rate reduction, towards closing costs. So that creates a really large advantage for buyers, right? If you buy today and we go in a recession in the next 12 to 24 months, what happens to interest rates in recessions?
It goes up. Well, it goes down.
They go down. Go down, right? So you buy today, in 12 to 24 months, you lower your payment. And then once rates go down, what happens as we go out of a recession, just like happened in 2020, rates go down.
Values go up.
Why, right? Because more buyers are entering the market, right? So you have the ability to buy today. You have the ability to reduce your payment in the next 12 to 24 months. And then once the market rebounds again, because more buyers are coming into the market, what happens to values? They rise again, right? And so, I think it's a great, it's a really unique time right now, but there's definitely some opportunity, right? And so, again, I encourage anyone that's considering it to sit down with a professional, really discuss what are your options and know what are your options. So that way you can make a very informed decision as to when might be the best time to buy.
Yeah. So actually I have a little spreadsheet I want to share with everybody. This is really telling, right? So in a typical market, when it's going crazy fast, right? When there's a lot of competition, prices tend to rise, right? Because you have to overpay for your house. And we typically see, maybe 3 or 4%, sometimes 5%. The average through the last few years has been 9%. That's been the growth, right? So if you buy $1 million house, you're going to pay 1.1 for it, 1.90, 1,090,000.
Mm-hmm.
Right? In a market where it's